Hello everyone and welcome to the crypto session brief. We're on Friday the 3rd of February 2023. We've had our central bank bonanza and mulling over this week's decisions from all of them and where it leaves us. Not much different from before, in all honesty. The Fed's message still seems to be falling on deaf ears. The ECB still set for 50 basis points hike in March, and certainly the more hawkish of the three this week. I talked about that more in the European brief earlier on today when we were discussing the euro dollar and the long euro being not an unwise trade right now. Bank of England remaining the most reluctant G10 hiker with an end of tightening seemingly in sight. That of course leaves the pound at risk versus other G10s. Don't fight the Fed works both ways and comes to mind for stocks, though. The question is if and when the market listens to what they are saying. So what am I saying is that the Fed's message has been received as being somewhat dovish. Price action post-Fed suggested it was somewhat dovish. That was the reaction we had in cryptos too, and of course bringing this relevant to cryptos is because the main driver for risk assets, of which cryptos fall under, currently is the Fed, to be quite frank, and that theme continues from last year into this one. Of course, the battle against inflation being the underlying issue here. So BTC, we've enjoyed a really nice rally, but again, falls in the category of the Nasdaq, for example. Nasdaq moving lower today. In fact, we had Apple, Alphabet, and Amazon earnings yesterday, and Apple's sales falling 5% globally at the end of last year. So sentiment at the minute seems to be for a move lower on the day. That's just following on from them from those earnings. We do have an important day ahead. We've got the a lot of data coming out of the US. We've got the jobs report. And that comes out at the same time as the unemployment rate. More importantly, average hourly earnings. So we'll be keeping a very close eye on that figure. A 4.5% print or higher on the average hourly earnings is what we could see being the pain trade, as in risk gets sold. So that'd be a move lower in BTC. So we'll be watching that one closely. Jobs, anyone's guess. I think consensus is around 210k. So if we came in around that number, but we saw that average hourly earnings moving higher, that'd be a reason for risk probably to sell off, just adding to sentiment from the earnings yesterday. So it could be a sharp move to the downside if that was to be the case. If average hourly earnings come in lower than the 4.3% expected, let's say a 4% print, and we get a decent looking jobs report that beats expectation, well, this would be a reason that you see cryptos and risk rally. So you'd see Ethereum likely smash through 1700. Bitcoin get through that resistance handle at 24 into 25, and it'd be a continued move to the upside from there, and this rally wouldn't be slowing down. Essentially, we'd see another leg higher if that print was to come out. I reckon that's what I'm thinking anyway. Ripple pretty liquid at the moment. It's very jumpy, the price. The trade, the wicks are all pretty high, and just not really a nice market to be trading if you are trading that on an intraday basis anyway, maybe a long term. But again, we've not really gone anywhere at all. Trading conditions very, very choppy. Litecoin a little bit nicer. There's been a nice trend higher on this market. You can see that move up into 102 though, and we've seen a rejection off 102. That was one of the support levels back at the start of Q1 of last year. We've come into there, just seen a pause and a move back down to maybe into 95 today before that announcement could get us back through the 102 area, or at least a retest of 102, potentially into the 106 area. Overall target to the upside being 115, but you can see a lot of high lows on the intraday H4 time frame here since that range low, let's call it, down at 50, and you're now up pretty much 100% since the start of November, since that range low. So if you were buying at the range lows and you were trading mean reversion, well, you might have already taken profit, but you also might have re-entered, let's say, around the 60, which was around about the range highs, and been trading this higher with the overall trend. Can this trend be sustained? Well, I think a lot of it comes down to this data release today. Let's see which way it swings. I'll leave it there for now. That's my thoughts. Until the next time, all the best with your trading. Enjoy. the rest of today, and I'll see you all on Monday's session brief. Bye for now.